Hello everyone, welcome to my YouTube channel Explain with Javed. Today we will discuss about different types of finance. Finance can be divided into three main categories, and all three play a huge role in our personal lives. These are personal finance, public finance and corporate finance. Personal finance is unique to us as individuals, corporate finance affects our job and the companies we consume from, and public finance changes the expenditure of our taxpayer dollars. We feel the effects of all three every single day. Let's look at the three types in detail. Personal finance. Personal finance is specific to an individual's situation and activity. Therefore, related financial strategies depend largely on a person's earnings, living requirements, goals, and desires. Financial planning involves analyzing the current financial position of individuals to formulate strategies for future needs, within financial constraints. For example, individuals must save for retirement. That requires saving or investing enough money during their working lives to fund their long-term plans. This type of financial management decision falls under personal finance. Personal finance covers a range of activities, including using or purchasing financial products such as credit cards, insurance, mortgages, and various types of investments. Banking is also considered a component of personal finance because individuals use checking and savings accounts as well as online or mobile payment services such as PayPal and Venmo. There are 5 categories of personal finance, which are income, spending, savings, investing, and protection. Income is money received, especially on a regular basis, for work or through investments. This is the category that starts the process of understanding your finances. It is the first step that is considered when starting the spending plan or budget process. Knowing how much money you have coming in will influence your decisions when it comes to distributing that income to categories that can affect the outcome of your finances. Spending is paying out money to buy goods or hire services. Spending is usually the second action that is taken when it comes to money. In this category, we tend to develop habits that constantly affect how we use, think, or feel about money. Savings are income not spent, or deferred consumption. In other words, it is money set aside for future use and not spent immediately. Saving is the most critical step in the process of understanding your finances. There are 7 main ways to save your extra money, and the best way comes down to the financial goals you set for yourself. Investing is expending money with the expectation of achieving a profit or material gain by putting it into financial plans, shares, or property. In finance, the purpose of investing is to generate a return from the invested asset. Investing should involve careful planning and an acquired knowledge that benefits you financially. It may also require the services of a licensed or certified professional in specific areas of interest. Protection is any measure taken to guard a thing against damage caused by outside forces. In the case of finances, this generally means purchasing some type of insurance. Insurance is a means of protection from financial loss. It is a form of risk management, and it can be used to prevent the risk of a contingent or uncertain loss. Public finance. Public finance includes taxing, spending, budgeting, and debt issuance policies that affect how a government pays for the services it provides to the public. It is a part of fiscal policy. Public finance contains national debt, tax collection, expenditures, national budget, difficult surplus. The federal and state governments help prevent market failure by overseeing the allocation of resources, the distribution of income, and economic stability. Regular funding is secured mostly through taxation. Borrowing from banks, insurance companies, and other nations also helps finance government spending. In addition to managing money in day-to-day operations, a government body also has social and fiscal responsibilities. A government is expected to ensure adequate social programs for its tax-paying citizens. It must maintain a stable economy so that people can save and be assured that their money will be safe. Corporate finance. Corporate finance refers to the financial activities related to running a corporation. A division or department usually is set up to oversee those financial activities. For example, a large company may have to decide whether to raise additional funds through a bond issue or stock offering. Investment banks may advise the firm on such considerations and help it market the securities. Startups may receive capital from angel investors or venture capitalists in exchange for a percentage of ownership. If a company thrives and decides to go public, it will issue shares on a stock exchange through an initial public offering, IPO, to raise cash. In other cases, to budget its capital properly and effectively. A company with growth goals may need to decide which projects to finance and which to put on hold. Thank you for watching. Please subscribe my YouTube channel.